Good evening, everybody. Thanks for tuning in to another FX.GOLDSMITH breakdown of course, gold spot versus the US dollar. Today's date, 2023-09-11. It is Monday evening here, so a couple days into the new weekly candle for us on gold. Let's get right into it here on our analysis. As you can see, previous monthly bearish candle, we've already created our top wick and filled about 50% of the candle so far. So let's drop down to the weekly time frame to see how things can set up to get that full wick fill and potentially a continuation there a monthly. What has the last few weeks done? So we have made a low here at about 1888, and we've made a high here at 1940. As you can see, looking left, we have these previous areas of support and previous areas of rejection there. So we rejected nicely around 1940 there, which lines up. We have some trouble here around the 1915s. So makes sense. What I'm looking for now, and it's setting up, is this is a retest play for me, just on the weekly time frame. The higher the time frame, the more confidence I have in the trade, and the more room there is to push down 260 pips to the bottom of the zone there. So I love this bullish push. Let's see if we can start breaking lows. I like how if we break one low, we're breaking another low all at the same time. So as of right now, it looks good for a potential continuation to the downside on the weekly. Let's go down to the daily and really see what we have done here. So need a few more zones. Let's add some support and resistance zones here. As you can see on our daily, let's take this out for you guys. On our daily, we've come back up to 1942, retested previous structure, where we then continued bearish for quite some time. So we came down bearish after retesting 1940s, and now we're having some troubles around the 1915s here. Which makes sense because that's where we have some previous structure on the daily, right? At first, here on Friday, the 25th of August, we got a high, right? A bullish followed by a bearish candle. And then immediately the next day, due to this rejection here from the prior day, we got a bullish continuation. This we discussed as our pullback phase. Let's see if we can truly continue down here. So today's daily candle closed bullish. So just based off that, we are expecting some bullish price action for a little bit. Whether we're going to fill the entire wick and continue, or on lower time frames, there will be a bit of a struggle, some consolidation, maybe a rejection that we have yet to find out. But the daily has made a lower wick. It has flipped, and it's looking like, we are going to potentially fill this wick into the 1930s. So let's drop down another time frame and really see what we are looking at here. You know what? I'm going to go back one, leave this because that's going to line up nicely. Okay, so as you can see, let's add some more zones. So in today's, I believe this was today's New York session here for Monday. You can see that previously, looking left, we had an area of rejection around 1928. So we would mark that up on the 4-hour time frame. And as you can see today, a couple attempts at trying to break above that, but no closure above, and therefore no continuation, actually a rejection. So just like this did, failure to close above, what we do? We grabbed some liquidity, broke some highs just like we did there, and came all the way back down to the 1916s from 28. So what did we do here in today's session? Failure to break, grab some liquidity, broke a high, continued down for 50, 60 pips, and found some support here at around 1920. So let's see, we know that the previous daily's bullish. We've gotten our bottom wick, we're flipping. Okay. So for me, there is a couple different things. I like sells at the top here, just like we would have gotten today on smaller time frames, if no closure above, right? So let me write this out for you guys. Struggling on the typing today. So if we close above on the 4-hour time frame, etc., you can expect a pullback and a continuation, right, to the next zone, next areas of interest. right? That being said, if you don't close above, what are our alternatives? Sells, right? Sells on no closure above or closure below. So now you can see, typically you would see sells on a closure below and it would be at the bottom of the range, right? But if you are unable or unable to close above a price, that also means that you are, um, or not also means, but if you're unable to close above, that means that you are potentially creating some exhaustion and price is not going to let you trade above that resistance area, right? So this is your best area of opportunity and your best risk to reward for sells to take all the way back down to the next zone, right? So if we come up here again, a failure to close above and stay above, I like sells below. If you close above, you can get those interim buys, etc. So inversely, we have sells, closure below here. And you have buys, closure above. So I hope that you guys understand that. Um, Full closure below, you're taking sells. The reason you'd be taking buys here is, again, failure or inability to close below gives you the best risk to reward um, going the opposite way. So we're able to take positions both ways. Again, just plan out your bias and wait for price to form in a way that you've analyzed and predicted, right? So let's drop it down to the 1 hour time frame, see what we see. We're starting to create a little bit of structure here for 1920. Ultimately, this is a very big range. And let's go back. This is a very big range, and we are essentially waiting for price action to give us a better understanding of where the market wants to head. We have our potential bias, of getting this wick fill, some rejection up here around the 1928, a potential closure below 1913, a nice clean traffic all the way down into 87 to fill your monthly wick, etc. Right? So that's what we're looking for. We've created a support here. Let's see if we can reject like we've done the past couple of days around your 1928, get some liquidity and continue to drive down. That's what we're looking for. Makes sense with the higher time frames, right? As I discussed on the weekly. Let's draw some candles out here for you guys. So first day into the week, you have that top wick. Let's see if this can really turn into this. Right? Something like that. So that is what I would expect later on in the week. And the reason I say that too, not only does that make sense technically, but look at the fundamentals that we have coming up. CPI, PPI, unemployment claims, consumer sentiment, etc. Right? So lots of high impact news and catalysts coming. So I am expecting a large move this week. And the reason you may not be seeing very much happen today, and the reason, or even tomorrow for that matter, is because of that news, right? We're consolidating, we're collecting orders. We will eventually grab some liquidity and the market will push in the direction. So right now, it's just ranging, it's just consolidating. As you can see on the 1 hour time frame, you have this 100 pip consolidation. Within that 100 pip zone, obviously, you have these little intra-session zones. But if you were to analyze this area how you would any other day, these zones just aren't big enough, right? It's choppy, it's messy. You're 20 pips. Above that, you have rejection here, 15 pips, another 30 pip, like just no clean traffic. We want to put ourselves in the best position, the highest probability to win and be successful. So I would say, unless you can grab sells at the top here after, again, things like this form liquidity is grabbed to drive down, stay out of the market, wait for a full closure above, or wait for this rejection. Inversely, if we grab some liquidity below here, failure to close and start printing some bullish candles in this direction, you can take some buys up. But again, I am heavily bearish. So let's see if we can get that weekly retest play and continuation on the monthly here. So again, to reiterate, sells around 1928 if no closure above. Closure above, you can have some short-term buys, maybe to 33, 35, top of zone. And then inversely, buys above 1914 if no closure, and sells below 1912 type of areas. So for now, stay out of this messy range, guys. Put yourself in the best position to win. It's one of the most difficult industries, to succeed in. So, we need any advantage and upper hand that we can, and it stems from psychology and sitting on your hands a lot of the time. So trading is a pretty boring and a pretty bland game, and treat it like that. It's also something you can do while watching a movie, or in your pajamas, in your sweats at home, at your office, etc. Right? So take advantage of it in that regards. Be casual, but be consistent. Right? Show up to the chart same time every day. Stick to your rules, and then you can really start to reap the benefits that industry can give you. So for now, guys, just wait for more price action. Let's see if we can get a little rejection, 25, 28, that type thing, for a continuation down. Again, we might not have a very momentum-filled push tomorrow. Obviously, there will be volume, granted the New York Open and the NYSE Stock Exchange Open. So there will be volume. Unlikely that will get a lot of runners, but who knows? We could see a priced-in move tomorrow for later on in the week. So that's all I have for you guys today. I appreciate the watch, and hopefully we'll see you guys in the New York session tomorrow. Safe trading.